Hey legends! In this video, I'm going to show you how to start investing in the stock market in Australia this year, even if you've only got $500 to your name. Spoiler alert, it's not rocket science. If you've got a bit of money and a smartphone, you can literally start today. Yep, today. In your pajamas if you like. And here's the exciting bit. With time, patience, and a sprinkle of consistency, that $500 could grow into over $1 million. Let me show you how. Step 1. Understand the basics of stock market investing. Now, the stock market might sound fancy, all graphs, jargon, and people yelling, buy, sell, but it's actually pretty simple. I could sit here and give you a 3-hour TED Talk about it, but let's keep it simple. As a beginner, you only need to know a few key things. What is the stock market? Think of the stock market as a big marketplace, but instead of fruit and veggies, people buy and sell pieces of companies called shares. Imagine a box of chocolates. That's a company. Each piece of chocolate is a share. If there are 100 chocolates, each one represents 1% of the company. If you buy 10 chocolates, congrats. You own 10% of the business and probably need to hide the box from yourself. If the chocolates become more expensive, say limited edition Tim Tams, your shares are worth more too. How do stocks make money? Two main ways. 1. Capital appreciation, your shares go up in value. Example, you buy 10 shares at $100 each, $1,000 total. A year later, the price jumps to $150. Now your investment's worth $1,500 and you've made $500 profit. Easy. 2. Dividends. Some companies share their profits with investors, like giving you a slice of their success pie. Not all companies do this, but the big, stable ones often do to attract investors who like a steady income. Is the stock market risky? Of course. Any investment has risk. The market goes up, down, sideways, and sometimes does the Macarena. You can reduce your risk by researching companies properly. Check their financials, balance sheet, and track record. But even the best research can't predict every surprise. That's why smart beginners don't put all their eggs in one basket or all their money in one company. Instead, they invest in ETFs, exchange-traded funds, bundles of many companies in one easy investment. Most beginners start with ETFs that track big indexes like the ASX 200, S&P 500, or global markets. Historically, the market has returned about 8–10% per year over the long term. Not bad, right? Why should you invest? In one word, inflation. You've probably noticed groceries are more expensive than they were 10 years ago. That's inflation, the sneaky thief that makes your money worth less every year. Leaving your cash sitting in a bank account is like leaving ice cream in the sun. It melts over time. Investing helps your money grow faster than inflation, protecting and growing your future buying power. Historically, both Australian and US stock markets have gone up over time. The Aussie market averaged around 9.9% per year, and the US about 11.1% over the past 30 years. Step 2. Set your financial goals and strategy. Before investing, ask yourself why you're doing it. Are you chasing FIRE, financial independence, retire early, building long-term wealth, or just want to dabble and learn? Then figure out how much you can realistically invest. Use the 50-30-20 rule as a guide. 50% essentials, rent, food, bills. 30% fun stuff, Netflix, Uber Eats, that essential new outfit. 20% savings and investments. If you want to speed things up, tweak the numbers. Cut expenses, pick up a side hustle, or ask for that raise you've been putting off. Choose a strategy for beginners. ETFs are your best friend. Start simple, think long-term, and avoid emotional decisions. Use dollar cost averaging, DCA. Invest a fixed amount regularly, no matter what the market's doing. Remember the saying, time in the market beats timing the market. Even if you just invest $500 each month and the market returns 10% yearly, after 30 years you could have over $1 million. And yes, keyboard warriors, that's before taxes and inflation. It's just an example. Relax. Step 3. Choose a reliable online broker. In Australia, you'll need a broker to buy stocks on the ASX. My go-to is Moomoo, and here's why it ticks all my boxes. 1. Low fees. Only $3 per Aussie trade and 99 cents for US stocks. That's cheaper than a coffee in Sydney. 2. Chess sponsored. Your shares are held in your name, not by the broker. Safer if the broker goes bust. 3. User-friendly, super easy to use, and you can open an account in minutes. 4. Auto-invest feature. Perfect for DCA. Set it, forget it, and let your money grow. 5. Access to US stocks. Want Apple, Tesla, or Nvidia? You can buy them right from the same app. And because you're awesome. 4. Buy your first stock. All right, time for the fun part. Let's buy your first stock. Once you've deposited your money, search for an ETF like VAS, which tracks the top 300 Aussie companies. Set your order type to market order if you want it bought right away, or limit order if you have a target price in mind. Fun fact, the ASX requires your first trade to be at least $500, which is why we started with that number. After that, you can buy smaller amounts. Click buy, double check the details, then hit confirm. Boom, you're now officially an investor. Step 5, understand taxes. Sorry, but it's important. 2 main taxes to know. 1. Capital gains tax, CGT. If you sell for a profit, that profit is taxed. Hold for over 12 months and you get a 50% discount, so you only pay tax on half your gain. 2. Dividend tax. Dividends count as income, even if they're automatically reinvested. So, yes, the tax man wants his cut. Plan ahead so you're not scrambling later. Final thoughts. Investing doesn't have to be complicated. Forget about predicting the next big stock or following every market headline. Stick with a simple, proven approach. Dollar cost average into ETFs. Stay consistent. Think long term. You don't need thousands to start, just that first $500 and the commitment to keep going. Remember, the best time to start investing was yesterday. The second best time? Right now. Quick disclaimer, I'm not a financial advisor. This is for educational purposes only. Please do your own research before investing or speak to a licensed professional. If you made it this far, comment, I'm going to invest this year. And if you're new here, what are you waiting for, mate? Hit that subscribe button. Thanks for watching.